Hello guys, welcome back. Today we're going to be talking about the last costing method, which is going to be weighted average. Okay, so again, yesterday and the day before, we went over FIFO, which is first in, first out, and LIFO, which is last in, first out. Now we're going to be dealing with weighted average. So again, this is where we're calculating inventory and we're buying them at a price, but we don't really care too much about how much it's going to cost us. We just care about just spreading the cost evenly and just selling everything at one price level. Okay? So in other words, taking the average of everything and just having one constant costing to sell our product. Okay? So again, I'm going to go ahead and dive straight into exactly what we're going to be looking into. So the equations for weighted average is almost the same. Everything is the same except for the cost per item. Instead of cost per item, we're going to have what's called average cost per item. Okay? So this is where we're going to get the total cost of the entire thing, and we're going to divide it by the total quantity. All right, so this will make sense when we move into the example. So again, the first two equations are identical. All right, the last two equations, goods available as well as cost of goods sold, they're identical. The only one that I want you to focus on now is instead of doing a cost per item, we're going to do an average cost per item. Okay. So again, let's go ahead and dive into the first example. So again, here we have on June 1st, we made a purchase of 100 toys at $1.25 each, and freight cost us $25. So how do we journalize this?
Start with the date.
Mm-hmm. Mm-hmm. What else do we need?
Purchase expense,
Mm-hmm.
freight,
Mm-hmm. All right.
I guess accounts payable.
Yeah, this is just assuming everything's on accounts payable, okay?
Yeah.
Or everything's on account. So again, we need to recognize our purchase expense, our freight expense, and what the total amount we owe. All right. So again, we're going to be putting it into our inventory table, okay, or our inventory worksheet. So again, we recognize that the same equations are going to pop up again. So we're going to find our purchase price, which is $125. Our freight is $25. So now we have a whole total of $150. Now, you can go ahead and find the cost per item. However, if we're doing periodic, it's not really necessary for you to do the cost per item. But I'm just going to keep it the way it is, just so then you can understand why you don't need to calculate the cost per item towards the end. All right. So now we're going to move on to the second one, which is June 11. And we made a purchase of another 100 toys at $1.26 with the, $1.28 at freight with 26. So how do we journalize this?
Start with the date.
Mm-hmm.
Purchase expense
Mm-hmm.
for 128.
Mm-hmm.
Freight expense $26.
Mm-hmm.
Accounts receivable.
Yes. So again, understanding this, good. All right. Now we're going to be putting it again in our inventory worksheet. So here we have 100 items for $128 and freight is $26. So again, purchase price is going to be $128. Our total is going to be $154. And then if you like, you can go ahead and do your cost per item. Now, we're already towards the end of the period, so we're going to call June 15 as our end of the period. So we need to calculate our totals at the bottom. All right, so we have 200 items available The total for us, the cost of those 200 items was $253 plus $51 of freight, and we get a grand total of $304. Now this is where this part right here, where we're finding our cost of goods, cost per item comes into play. So instead of doing all of this, we're going to find the average cost per item, and the average cost per item was the total cost divided by the total quantity. So in this case, it's going to be 304 divided by the 200, okay? And that's going to give us an average cost per item, right? So we're taking all of everything and we're just going to spread the cost evenly amongst all of it. So this is what this is, okay? All right. So again, we've already calculated it and I got $1.52. Now let's look at the top again. So the first batch was $1.50 and the second batch was $1.54. So notice that the cost of the average cost per item, it's actually in between, which is exactly what the goal is. The cost is going to be between the two numbers that you just saw. So, if you remember back in grade school, that is exactly what the average is. Okay? So we know that from the total of the 200 items, it is going to cost us $1.52. Then we're going to be moving into our inventory worksheet, right? So here we enter in all the numbers. Here we recognize that we don't have beginning inventory and that our goods available is going to be 200 items at 304. Again, we're given that 80 is our ending inventory. So therefore, we should have sold 120 items. Okay? Now we're going to be looking at our inventory table, okay? We notice that, look, now we have a pile of 200 items and it's going to cost us $1.52 per item, which is going to give a grand total of $304. So because we don't have to take it out of certain sections, we know that we sold 120 of those items. So we're just going to take 120, multiply it by the average cost per item, which is $1.52, and you're just going to get $182.40, right? And then how do we solve for the remaining? It's going to be either you subtract the goods available by the cost of goods sold, or you can simply just have 80 times the 152 and you should get the same answer. So in this case, I showed that I did both and I got $121.60. So the great thing about this one is no matter what number you use, you're only going to calculate one number, which is the average cost. Okay? So you don't need to add 100 from this one. You don't need to add another 50 from the other or another 20 from the other pile. It's all one number. And this is the easiest one. Okay? Any questions about average, weighted average?
No?
All right. Pretty easy, right?
Yep.
All right. So here again, when we do that, we need an ending inventory. We need to convert our inventory. So here I have the purchases and the freight expense, and I entered my ending inventory and my cost of goods sold. So again, all this information, you're going to be pulling it from the worksheet. Okay? So again, everything's pretty straightforward. Now, what happens when you have beginning inventory? So this is very, 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 very crucial to understand when you have beginning inventory, because the concept of you finding the average cost is a little different. Okay, so again, let's go ahead and do the next example. All right. So again, we're dealing with sales in June, June 15th, you have a available balance of 80 units, costing at $1.52. Okay, I think I forgot to change that. So yes, so let's go ahead and enter into our worksheet. So here we have on the 18th, we purchased another 100 items at 127, and then adding the cost there. And if you like, go ahead and do the cost per item. Then we're gonna also add in our second scenario, which is we purchase another 100 for $1.30. So then we'll just keep filling out the table. All right. Now here's where it's different, because if we're having beginning inventory, you do not need to solve for the average cost per item just yet, because you have to also include our beginning inventory. So this is why this part now is different if you have beginning inventory. So what happens is go ahead and fill in the rest of the table. So we fill in our net purchases. Here, when we're dealing with our cost of goods sold, right, we're going to add our beginning inventory of $121.40, and we're going to add that to our 308. So total goods available is going to be 280 units at $429.60. And what's going to happen is now we're going to take that new number right here under goods available, and we're going to use that to calculate the average cost per item. Okay, so now we're going to be like, okay, we're going to take our $429.60 and we're going to divide that by our 280. Okay, so now we're going to get this little big number. Now, you can round early if you like. There's nothing wrong with that. But if you round early, just know that you have to change the amount of total every single time. When we move on to actual looking into our fictitious business and coffee cafe, you will understand if you choose to round early. So let's say I say I want to round this 153.43. I want to round it to just $1.53. Now, if you go ahead and punch this into your calculator, $1.53 multiplied by the 280, you're gonna get close to this number 429, which it's not gonna be exact, okay? Because again, we're dealing with hundredths of a penny, thousands of a penny. Every penny counts if you're selling items, like items in large quantities, or if you purchase items in large quantities. Every single penny counts. But for this example, I'm going to leave it unrounded so we can get the most accurate answer. Okay? So, yes. So I'm going to say here we know that here we understand that we had 60 left in ending inventory. Therefore, we have 220 items that we sold. So what we're going to do now is we're going to calculate the 220. We're going to multiply it by the 1.5343, and that's going to give us $337.54. Okay? So if we rounded, this number would be off. It's not going to be 337. It's going to be actually close to 338. Okay, but in this scenario, I'm not rounding yet. Okay, I'm only rounding when I get to the finish point, to the finish, the ending. When I get my cost of goods sold, and my ending inventory is when I start to round. Okay, so now that I found out that this is 337.54, I go ahead and subtract that right out from goods available, and I'm going to get $92.06. Now, flip reverse, if I were to multiply 60 by the 1.5343, I'm actually going to get 920643. So from there, I'm going to round it off to make it like this. Reason being is because when you actually journalize your journal, you can't have a tenth of a penny on there. Everything has to be rounded to the nearest penny. So also understand that concept as well. Okay? Any questions to how I got to 9206 or how rounding is going to be an issue, or just in general weighted average? It's by far the most simplest, easiest concept.
Rounding only works in weighted periodic average.
Say that again?
We only round when we're doing periodic weight average, right?
No. This applies to FIFO and LIFO as well. I just used numbers that were already rounded off, or what do you call it?
Yeah.
That had an even division, or like it was easily to be divided. But no, because weighted average, you're more likely to be getting numbers like this where it's ongoing. Just because you're more likely to have an odd amount of items or an odd amount of dollars to be divisible by. You're more likely to have it. Okay.
Okay.
Lynn, I got a quick question.
Yes.
If it's 92.065, would we round that up to 92.07 at that point?
Yes and no, but it's also going to be dependent on which one you solve for first.
No, I mean if it's at the end. If we're doing everything by what you're saying, if we're waiting for it at the end, if it's 92.065, blah blah blah.
Mm-hmm.
If it's 5, we still round up, right?
Yes.
Okay.
But in this case, I think you should not, because remember, when we're journalizing, what must hold true?
Debit's got to equal credits.
Debit's got to equal credits. And if your cost of goods sold and your ending inventory does not equal the total amount of goods available, yeah, then you would have to choose one of them to decrease a penny from.
Okay.
Yes.
Okay.
Yes. Either you round up or round down. It's given on which one you solve for first. Okay. So again, that is weighted average for you. And then here is the same thing, converting it, making sure you recognize that your ending inventory is going to be whatever it is that you solved for. And don't forget when you're converting, to also include your beginning inventory. All right. Now, this is what I was waiting for the entire time, is what happens and why are we learning all these types of conversions, right? So this, again, is an outline of all the problems that we did throughout this entire week. We saw FIFO, we saw LIFO, and now we just saw weighted average. And right here, I'm comparing the difference between all three and what the results are. Okay, so again, what was consistent was we had our goods available. That was the only thing that's consistent. But based on how we average our costs, or how we solve for how much we sold, that is going to be the line and the difference. Because for the first one, we recognize that we actually sold the cheaper ones first for the first in, first out. LIFO, we sold the more expensive ones first. For weighted average, we didn't care. We made sure that we found the average of every single one, and we costed out that way. So again, okay, which method would you prefer? Again, this is going to be dependent on, one, what kind of business you are. Second, what do you sell? And third, actually, no. Those are the only two I can think of. So how you determine which method to use and which method works best for you is going to be based on your company. So whoever the accountant is, if they say, I like weighted average better. I want everything you want to do. I want everything to be consistent and just be sold as weighted average. Okay, the accountant says to do it that way. All right, then I have to do it that way. There are also, like, for example, Walmart. Walmart does have some differentiations in in costing methods, but they primarily use weighted average. Okay, reason being is because their products that they sell, it's a daily use, right? They sell water, they sell cleaning supplies that are always constantly being bought every single day. But they also sell perishable goods, right? Now, for them, if it goes bad, they throw it out. They don't even keep it in inventory anymore. They throw it out. So they write a loss for that. They don't even care to do the FIFO method. They just take the average of it because, they buy it constantly. Maybe it's 20 cents for them to buy, and they just sell it out for whatever amount of price they wanted to call it for. They take the average of it. And if it goes bad, throw it out. We don't care to keep costing it, okay? So again, it's going to be based on your company and the products that you sell, and also which one works best for you, okay? So as you can see, if you do end up using FIFO, you're more likely to have a higher value in your inventory, okay? If you do LIFO, you're going to have a lower value in your inventory. For weighted average, it doesn't matter. They're all going to be cost the same. So whether it gives you a better outcome or not, it's just an average, all right? So again, many people actually use this method to make sure that their company holds a higher value. So they're more likely to try to see which costing method is going to not overstate their assets, but making sure that their assets are placed at a higher value, okay? Plus, it's also a way for them to also purchase the things that cost them the least amount. So when they sell it, they're selling the cheaper ones to kind of hold on to the more expensive one, because you don't want to lose your profit. If the price is the same, your selling price, and you purchase it for a higher value, you don't want to cost it right away, because it's gonna drop your profit margins a little, because your cost is higher than what you're selling it for. So there's a lot of reasons why companies would choose a certain method over another. Okay? So yes, let's look. This is just a good example of showing you exactly what the difference is and how the results affect the overall company's inventory. Okay? So any questions about weighted average or just any of these costing methods in general?
I have to do practicing to understand them, but yeah,
Yeah.
okay right now.
Okay. Next week we're gonna go over more and more examples of each one. So don't worry about that. Okay.